of equivalent units prepared and presented by Silva and James. Right. First, we have to look at some of the similarities between job order and process costing. The first thing is both systems assign material, labor, and overhead costs to products, and they provide a mechanism for computing unit product costs. Then both systems use the same manufacturing accounts, including manufacturing overhead, raw materials, work in process, and finished goods. All right. The flow of course through the manufacturing account is basically the same in both systems. So there isn't any big difference between the two. It's just in the nature of the production. The differences between job order and process costing. Process costing is used when a single product is produced on a continuing basis or for a long period of time. Job order costing is used when many different jobs have different production requirements and work on each period. Job costing is something like building houses, right? You could work on many different houses and they are all different. Process costing, on the other hand, is something like manufacturing soft drinks, one large amount for a long period of time, and you don't, and it is not different, the product. That is, the process costing systems accumulate costs by department. For each process in the production, you will have the department carrying out that process. Job order costing systems accumulated costs by individual jobs. Process costing system compute unit costs by department. Job order costing system compute unit costs by job on the job cost sheet. Right. Still comparing job order and process costing, they all use the same elements of costs: direct materials, direct labor, and manufacturing overhead. And but for working for process costing, you will have more than one working process account, and the each process has its own working process account. The materials, the labor, and the overhead cost is accumulated in the working process account, and from when the product is finished, it is transferred to finished goods, and from finished goods, it goes to cost of goods sold in the income statement. Still comparing job order and process costing, the elements of cost goes to each department in process costing. The costs are traced and applied to departments in a process cost system. From there, it goes to finished goods, cost of goods sold. So basically, this slide is saying the same thing as the last one. Right, we're going to look at the double entry. From when you purchase raw material, it goes in here on the debit side. And when you allocate them to the factory, we credit raw materials and we debit whatever process it goes to. In process costing, you will have more than one process. Each process has a department, and each department will have a work in process account. And as the materials go to them, it is debited there, credited here. Same thing happens with the direct labor, credited in the salaries and wages account, debited to the processes. The manufacturing overhead, the actual overhead paid is over here on the debit side. And when we apply our overhead POHR, predetermined overhead rate, to apportion the overhead to the processes, we credit it here and we debit each one of the process. Right, now at the end of a process, the first process, the incomplete goods is transferred from that process, or they are partially completed here from in department E, and they are credited out and transferred into the next process here, where more materials, labor, and overhead might be applied to them. It is more usual to have this one at the top. Okay. From department B, it could go into another process, or it could go, if it's finished, the goods is finished, it will go into finished goods and then to the income statement. Okay, so work in process B, this is department B, this is the last process. The cost of goods manufactured goes into the cost of goods. Goes into the finished goods. Right. Now we want to look at the equivalent units. What is our equivalent unit? Okay. The basic idea is that in each process you have partially produced goods. Okay. Let's say you might have goods that are half completed in each process. Two halves would make one whole product. That's an equivalent unit. It's just for measuring the amount of work done. It's not saying that the units, all the costs have gone into it, but for costing purposes, we take two halves, make a whole. If it's less than a half, like 10,000 units, 70% completed would be 7,000 complete units. If we have 10,000 units, 30% completed, it will be 3,000 equivalent units. So that's the basic idea of it. Right? You have two methods of production of measuring equivalent units. One is the weighted average method, which makes no distinction between the processes. Work done in the previous process and in the current process. It blends together, adds all of them together, lump them together, and find an average cost for the equivalent unit. So it determines equivalent units of production for a department by adding together the number of units transferred out plus the equivalent units in ending work in process inventory. Okay, so all the units that would have transferred to the next process, or all the units that would have transferred out to finished goods if it's the last process. We add the and then working process to that divided by the number of equivalent units. Okay, the formula for cost to get cost per equivalent unit under the average method would be the cost of the beginning working process plus the cost added during the period divided by the equivalent units of production. Okay, so the cost of the beginning working process plus all the raw materials, the labor, and the overhead added during the period divided by the number of equivalent units. The next method is called the first in, first out methods. And this one makes a distinction between work done in prior and current periods or in the process before the current process. And it does not add together costs from prior and current periods. Okay, it determines the equivalent units of production for a department by adding together the work done on the beginning inventory units from prior period in the current period to the work done on units started in this period. Okay, now that might take a little thinking about. What is happening is the inventory that come in from the previous process or from the previous period. You will take only the costs that it incurs within your the current period, and you add that on to the work done on units started in this period. So basically, what you're looking at is the costs for the current period only. Okay, the formula would be cost per equivalent unit, costs added to the beginning inventory. Right. Notice in the school, it was the cost of the working process on the whole coming forward. But this is only the cost that is added, is taken during the period. So if the working process had cost, let's say $100, and we would not include that $100 in FIFO. What we will include is any other costs that the working process would incur in order to become completed for that process. We add any other costs for the period. From that, we get the equivalent units of production divided by the equivalent units of production. Okay, if you don't quite get this part here, when we work our work example, you would see it very clearly. Okay, so don't worry too much about it at this stage. Okay, we want to look at a brief video that explaining the process.